Good morning, good afternoon, or good evening, depending on where you're tuning in from. Welcome back to Macro Shock. I'm your host, Dave. And folks, we've got a bombshell brewing that could seriously shake up global trade and your portfolio. Are we about to witness the unraveling of a cornerstone of U.S. trade policy? Or is this just another twist in a trade saga that keeps investors on edge? A federal appeals court just dropped a ruling that could send shockwaves across the market, challenging the very legality of President Trump's sweeping tariffs. This isn't just a legal debate, it's a macro event with potentially massive implications for every one of us. So, what exactly happened? On Friday, August 29, 2025, a U.S. federal appeals court ruled that most of President Donald Trump's globe-rattling tariffs are, in fact, illegal. This isn't a small adjustment. This is a significant blow, largely upholding a May decision by a specialized federal trade court. The court's reasoning? They found that President Trump overstepped his presidential powers by using the International Emergency Economic Powers Act to impose these levies. The IEPA grants the president authority during national emergencies, but, crucially, the court determined it does not explicitly grant the power to impose tariffs or taxes. That, my friends, is a core congressional power. The ruling specifically targets what Trump called his Liberation Day tariffs, which established a 10% baseline on virtually all of the U.S.'s trading partners, along with his reciprocal tariffs on countries deemed to have unfairly treated the U.S. It also includes certain tariffs imposed in February against China, Canada, and Mexico. However, it's important to note this ruling does not affect tariffs on steel, aluminum, or autos, which were imposed under different authorities, nor did it touch the tariffs on China from his first term that President Biden maintained. Now, for the immediate impact, the tariffs haven't been struck down yet. The court has allowed them to remain in place until October 14, 2025, giving the Trump administration time to appeal this decision to the Supreme Court. Predictably, President Trump lashed out on social media, calling the appeals court highly partisan, insisting all tariffs are still in effect and warning that if the ruling stands, it would literally destroy the United States of America. Mainstream media across the board is reporting this as a major legal challenge to the administration's trade policy, setting the stage for a potential Supreme Court showdown. This ruling and the subsequent legal battle introduces a significant layer of uncertainty into the global economic outlook. Let's break down a few possible scenarios and their potential market impact. 1. Supreme Court upholds appeals court ruling, 45% probability. In this scenario, the Supreme Court agrees with the appeals court, and most of Trump's broader tariffs are ultimately deemed illegal and lifted. 2. Supreme Court overturns appeals court ruling, 35% probability. Here, the Supreme Court sides with the administration, validating the president's expansive use of emergency powers for trade policy, and the contested tariffs remain in place. 3. Prolonged legal legislative uncertainty, 20% probability. This outcome sees the issue remaining in legal limbo for an extended period, or Congress attempting to step in and clarify presidential authority on tariffs, leading to prolonged uncertainty. 1. Supreme Court upholds appeals court ruling, 45% probability. If the Supreme Court upholds the appeals court's decision, leading to the removal of these tariffs, we could see a significant shift in market dynamics. Overall stock market, S&P 500, NASDAQ. This would likely be a net positive for global trade. We'd expect reduced input costs for many businesses, which could directly boost corporate profits. The S&P 500 and NASDAQ could see an upward momentum, driven by improved market sentiment and lower operational expenses for companies. Specific market sectors. Technology. This sector stands to gain substantially. Many tech companies rely heavily on global supply chains for components. Reduced tariffs would mean lower input costs and improved margins. Increased global trade flow could also boost international sales. Consumer discretionary and retail. A strong positive here. Lower import costs for a vast array of goods could translate into lower prices for consumers, stimulating spending and boosting retail sales and margins. Manufacturing and industrials, export-oriented. Companies that export goods would likely benefit from fewer retaliatory tariffs and a more open global trade environment, making our products more competitive internationally. Financials. Generally positive, as an improved global economic outlook and increased international trade activities would support trade financing and investment. Major well-known stocks. Apple, AAPL, could see significant margin expansion due to lower costs for components manufactured abroad and potentially higher international sales in markets where retaliatory tariffs might have existed. Walmart, WMT. As a major importer of consumer goods, Walmart would benefit from reduced import costs, allowing for better pricing or improved profitability. Boeing, BA. A key exporter, Boeing could see increased demand for its aircraft and a more favorable environment for global trade deals, reducing trade barriers. Scenario 2. Supreme Court overturns appeals court ruling. 35% probability. If the Supreme Court reverses the appeals court, essentially affirming the president's authority to impose these tariffs, the market outlook would likely remain more cautious. We would likely see continued trade uncertainty and the potential for further escalation of trade disputes. This could lead to sustained market volatility or act as a drag on global economic growth. Both the S&P 500 and NASDAQ might face headwinds, especially for companies heavily reliant on global supply chains or export markets. Specific market sectors. Technology could experience a negative impact due to continued higher input costs for components and potential for ongoing supply chain disruptions. Consumer discretionary and retail would likely be negatively affected as higher import costs could lead to higher consumer prices, potentially dampening consumer spending and impacting sales volumes. Manufacturing and industrials. This sector could see a mixed impact. Domestic producers benefiting from existing tariffs might see a boost, but those reliant on imported components or focused on exports could suffer from higher costs and reduced international competitiveness. Energy. Less direct impact, but a global economic slowdown caused by prolonged trade tensions could reduce overall energy demand. Major well-known stocks. Apple, AAPL. Continued pressure on margins due to tariff costs and potential for retaliatory tariffs in key international markets could impact sales. Nike. As a company with a global supply chain, it would likely face continued higher import costs. Caterpillar could experience reduced international sales due to trade barriers and potentially higher import costs for its manufacturing. Scenario 3. Prolonged legal/legislative uncertainty. 20% probability. This is the wait-and-see scenario, where the legal battle drags on, or Congress initiates its own legislative efforts to address the issue, prolonging the ambiguity. Increased volatility and risk aversion would be the hallmarks here. Investors generally dislike uncertainty, which could lead to sideways trading, slight pullbacks, or a general lack of strong conviction. Broad-based uncertainty tends to affect most sectors, but those most exposed to international trade, technology, manufacturing, and retail would feel the impact most acutely. Defensive sectors, typically less sensitive to economic cycles, might see some rotation of capital as investors seek safety. Most large-cap stocks with significant international exposure would be impacted by the ongoing uncertainty, as their future operating environment remains unclear. Capital expenditures and long-term planning could be curtailed. All right, so with all this swirling uncertainty, what's Dave's take? Right now, my playbook is all about prudent observation and strategic positioning. While the appeals court ruling is a monumental event, the tariffs are still in effect until October 14th, and the Supreme Court appeal adds another layer of complexity. Therefore, I'm not making any rash moves. Instead, I'm actively watching for clarity from the Supreme Court. However, I'm also keenly observing sectors and individual stocks that would be poised for significant upside if Scenario 1, tariffs removed, plays out. Companies with heavy international supply chains or large export revenues could see a substantial tailwind. On the other side, I'm also ensuring my portfolio has some defensive resilience, just in case the uncertainty persists or trade tensions escalate further. Now, let's tie this into the technical picture for the SPY, because even with all this macro noise, the charts tell an important story. On the higher time frame, like the weekly, the SPY is very much in a strong uptrend. This tells us that, despite the concerns, the underlying market momentum has been positive. Looking at the daily chart, as long as the SPY holds above key supports of 640, 620, it should continue to move up to the next resistance level of 665. What does this mean for us? While the macro news about these tariffs is a significant event, the market's technical structure shows a degree of underlying strength. Those support levels at 640 and 620 are absolutely critical. Any sustained break below them would signal a deeper concern from the market about this or other macro shocks. But if the SPY can maintain these levels, even with the ongoing legal battle, it suggests resilience and a potential path to that 665 resistance. We need to watch these levels closely as the market digests the full implications of this tariff saga. What do you think about this monumental ruling? Are you bullish on a trade liberalization bounce, or are you bracing for continued trade wars? Let me know your thoughts and your market strategy in the comments below. And if you're getting value from these deep dives, please hit that like button, share this video, and if you haven't already, subscribe to Macro Shock and ring that notification bell so you don't miss our next update. Remember, this is not financial advice, just my analysis and perspective as a retail investor. Always do your own thorough research and consult with a qualified financial advisor before making any investment decisions. Your capital is at risk.